think we probably have a little bit more work to do. And from my perspective, what's that mean? Maybe a month or two. I do believe we'll finish out the end of the year, the last quarter above 30, probably the whole time or close to it. We could get a down move for a few days or some bad news or whatever. But no, I think we're going to finally get over that 30 and make it support rather than resistance. As you know, we've been there already. We've been as high as 32.50. And so it's not a big stretch to think that silver can do it again and sustain it.
The precious metals market has been experiencing significant momentum, with silver and gold prices reaching notable milestones in recent trading sessions. Silver, in particular, has shown remarkable strength, touching the $30 per ounce mark twice in as many days and extending its winning streak to 3 consecutive sessions. This upward trend, which began in early August, has been further bolstered by geopolitical tensions in the Middle East, especially the recent escalation between Israel and Hezbollah. DavidMorgan, a renowned expert in precious metals and founder of the Morgan Report, offers valuable insights into these market movements. Morgan anticipates silver to close the last quarter of the year above $30 per ounce, potentially transforming this level from resistance to support. He notes that silver has previously reached as high as $32.50, suggesting room for further growth. The bullish sentiment also extends to gold, with prices hovering near recent record highs. Early U.S. trading on Monday saw both metals climb, with silver hitting a 6-week high. The upward trajectory is attributed partly to increased safe haven demand, a typical response to global uncertainties. Technical factors are also at play, with bullish chart patterns attracting speculative long positions in both metals. Looking ahead, Morgan provides ambitious forecasts for gold prices. He predicts gold could reach $2,600 to $2,700 by year-end, possibly hitting $3,000 under specific circumstances, such as election-related issues or further escalation of global conflicts. Recent market data supports these bullish outlooks. Gold extended its gains on Monday, trading at $2,516 per troy ounce, up 0.16%. This surge is primarily driven by increasing expectations that the U.S. Federal Reserve will begin easing its monetary policy in September. Fed Chair Jerome Powell's recent comments at Jackson Hole, stating that the time has come for policy to adjust, have further cemented these expectations. Please tune in for our exploration of David Morgan's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
We're in the third leg of a major secular bull market. The pause phase was extremely painful and a lot longer duration than I ever expected it to be. But nonetheless, we have started the third leg up. The run to gold has begun, as I've said on your, podcast and many others, that, starts off rather stealthily, where, just the central banks are buying more gold than they have in times past, which is taking place. And then more and more institutional types will come in, and then, pension funds and hedge funds, and then individuals and wealth managers will be pushing them clients into gold, and, on and on it goes until we get a lot of momentum. So where do we end the end of the year in gold? Again, I don't know for sure, but it wouldn't surprise me to see something in the 2650, maybe 2700. Will it get to 3000 by end of the year? It could. I think for that to happen, we've got to see something big, like some problem with the U.S. election, or election maybe in another country. Some, unfortunately, maybe escalation in the war, some asymmetric, something that happens in the war. And I'm talking the Middle East and Ukraine and, Taiwan, who knows? So, but to get $500 more in this year on gold is a bit of a stretch in my view, but certainly can happen. But the point is that we don't really have to fear trading from the long side for both the metals, which doesn't mean you can be blasé about it. If you buy and hold, you can be pretty calm about it. But if you're trading, you want to pick your entry points very carefully and keep stops tight, and realize that even in a big bull market, even in the last phase, which is usually the most rewarding, that there will be some significant pullbacks and some times where you doubt that the market's going higher, that maybe it's peaked. I think, the problem with the COT is it's very accurate as far as the trend shift. It's inaccurate as far as duration. As soon as you get into this zone, Is it going to be a week, a month, 2 months, sometimes 3 months before it actually flips that direction? Well, we're in a caution area right now. If you're trading right now, I would take profits, over the next, short duration, maybe be early, but no, it doesn't look good structurally for gold right now. Again, well, David, last week you said it looked good in gold's, $100 higher. Are you out of your mind? No, I'm not. But these are zones. So we're in what would be called the selling zone on a trading basis. Again, how long it will take, we don't know.
Yeah, we have a few viewers' questions here. Jack is wanting to know if you have a prediction of where silver will close before the election, and then this Nate is wanting to know if you think the outcome of the election would impact silver either way.
Yeah, interesting question. First of all, before the election, I'll say it's over 30. After the election, depending who gets in, I'd say if the Democrat gets in, it'll be $2 to $3 higher. If Republicans get in, it may be more a lower move, like stay around the 30 level, kind of hug that level. There is a bit of a correspondence between who's elected. Once the illness happened, we saw that big sell-off in silver. We got about 120, 125 to 1, the gold-silver ratio. I was lucky enough to buy within a couple of days of the bottom. And then it shot back up. Trump left and Democrats got in. And a lot of people, well, after Trump got in, basically, a lot of people just sort of gave up buying their precious metals. It's like, well, someone's in the White House that's going to fix everything for us. And that's my strong belief that's incorrect. You really have to, feed your family first. You can't depend on any political figure to solve, problems.
Ghana, an African nation, has taken a bold step in this direction. Vice President Mahamudu Bawumia recently announced plans to back the country's local currency, the cedi, with gold. This move is aimed at addressing Ghana's economic instability issues. While the policy is yet to be implemented, it could potentially usher in a new era of monetary standards for the country. This approach aligns closely with the BRICS Alliance's strategy to reduce reliance on the US dollar. The BRICS Alliance has been at the forefront of efforts to create alternatives to the dollar-centric global financial system. DavidMorgan suggests that the BRICS Alliance could mitigate some economic challenges by agreeing to trade in each other's currencies. However, he cautions that the global economy's deep interconnectedness means that even if the US dollar were to default, it would still likely significantly impact BRICS nations. The influence of BRICS appears to be expanding beyond its core members. Recently, Palestine announced its intention to apply for BRICS membership officially. This follows a meeting between Russian President Vladimir Putin and Palestinian Authority President Mahmoud Abbas in early August. As a result of these discussions, Abbas has been invited to attend the 2024 BRICS Summit. Let's get back to the interview.
Perhaps this BRICS alliance could mitigate the problem somewhat, and all those currencies that are aligned with the BRICS agree to keep trading each other's currencies. That's a possibility. I won't rule that out. If it's a savior or not, I would say no. There's just too much based on the US dollar for that to mitigate the whole problem. I mean, it's sort of like, I can't think of a really good analogy, but running out of food supply, but you have, stockpiled and seen it coming. And so you got a month's supply worth of food. So you get a month further down the road. But for the international settlements market to have the dollar not be used because of a default one way or the other, I think it'd still take down even the BRICS. That's my opinion, but that's how I see it. India is creating the largest solar farm in the world. It's going to take up the same amount of space as Paris, France. So think about Paris, France, and expand your mind and think of that whole area is filled with solar panels. That's a lot of silver. And then China is the number one manufacturer of solar. So they need the silver to manufacture solar. Moving on the investment side, I mean, until India became wealthier on a per capita basis, most of the population bought silver to store their wealth because they've had centuries of currency abuse. So they know if they're going to put any savings away, not to do it in the currency, to do it in metal. So silver was really the metal of choice or default because gold was just too expensive for much of the population. That's changed over the last decade or more. So a lot of them go to gold, have it, but silver's still there in the background and still used for the same purpose. On China, they really were pretty much gold only as well for a long time. And recently, with their banking crisis, their real estate crisis, they're looking at both metals. And as most of our viewers know, there's been a big discrepancy between the Shanghai Gold Exchange price of silver and the COMEX or London price of silver. So the retail investment in silver in China has actually picked up rather measurably.
As nations explore alternatives to traditional financial structures and investors seek safe havens in uncertain times, the roles of gold and silver continue to evolve. Whether we're witnessing the early stages of a significant shift in the global economic order or a temporary market trend remains to be seen. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.